Alrighty, so this is a quick breakdown of the S&P 500 short that I took last week, resulting in negative 0.62 risk to reward. So this is a IBO short setup on the day trading side of things. So we had the nice overextended run to the upside, reaching that 62.50 quarter level up in all-time highs. So basically I'm playing that retracement back down to revisit these weekly highs over here, but then potentially going up higher, but capitalizing on that daily pullback. So the directional prediction came at the off the back end of that rally to the upside. Then we had the bearish engulfing, followed by that high test bearish candle here as well, indicating that prices hit its head up on its highs, and then the deceleration candles and the rejections coming back down to the downside. So looking pretty good on the daily time frame, and that was the directional prediction. On the 4-hour time frame, we had a really nice step down from a high, low, lower high, lower low, full trend change confirmation on the 4-hour as well as the 1-hour, which we'll touch on shortly. Just before the entry, we got that 4-hour high test closure off that resistance level there. So that was an additional confluence, giving me a really confirmed 4-hour time frame to take that one down short. Now on the hourly time frame, again, we had that full trend change confirmation with price making the high, the low, the lower high, and the lower low. So we had the wave 1 breakdown, and then we took the wave 2 pullback up into the 1-hour 50 EMA, looking to catch wave 3 run down into that 4-hour 50 EMA. So that was more or less how I was looking to capitalize on the position. We had the clean wave 1. I really liked that. No complaints on that part. Swift wave 2 retracement back up into the 50 EMA. Within that region, we had the first touch, second touch. You could argue this is a third touch breakout, and then we had the additional touch here on the trend line, descending trend line here, as well as this box region mapped on that 1-hour bearish candle across, all in conjunction with that 0.382, the 0.5, sorry, as well as that 1-hour 50 EMA. So a very highly confluenced area here for price to reverse and push down to the downside. So in terms of the execution model, I was waiting for that 5-minute 50 EMA breakout, which we did end up getting just 5 minutes before the 8 p.m. closure here on Gold Coast time. So once I got that 5-minute 50 EMA breakout, it was all systems go. Execution at market, stops behind 0.736 as price was already above the 0.386. We had a nice 0.85 to 1 risk to reward down to the body of the FTA, and then we had a 1.6 to the lower wick, the extreme of that FTA. So a bit of a it's not strictly meeting the 1-to-1 criteria to the downside, but it just depends on where you map it to get that calculation of the risk to reward to the FTA. But 0.85 to the bodies, I was more than happy with that, especially because we had 1.6 to the extreme. So this one was a decent position after execution. It didn't do a whole lot, but didn't really give me much room to navigate any reduction of risk, so to speak, until price had rejected those bodies here on that 1 hour at the FTA. So we didn't really come down too much further than the body closures there. We just got a couple of wicks, but once we had that first drive, second drive, third drive, we're at that body closures, the FTA running about 0.8. The way in which price has respected that downwards trend line here, very, very choppy price action into that FTA. There's no chance I'm holding an open, a full risk on the table with hopes that it comes down to that extreme end of the wick, so close to target as well. So much more of an aggressive management, however, still taking the balanced approach. There was nothing aggressive about it in regards to the plan. However, it's just, this is more of a setup that invokes the perspective of, okay, this is it requires a bit more of an aggressive on the ball management. You're not really waiting for those body closures around the bodies at the FTA if we're getting spikes down at that region. I'm clipping my stops behind the recent high, phase one risk reduction. Break even at this point would have been far too aggressive, in my opinion. You're really just not giving price much room to run. You're trading at about zero point 0.8 at the extreme. So if you were to move to break even, there's just no real room for the market to come up, form a lower high, and then move to the downside. So that's why my management these days is to stop clip the recent high, just to give that room, give price that room to pull back up, form that lower high, and then move to the downside. Especially when we've got that 4 hour and that daily confirmation looking really good. So that was the way that I managed the 1 hour. Again, strictly to the plan. Nothing was different about it, and nothing was more conservative or aggressive about the rules, but more so just being much more on the ball and being ready to quickly move the management and execute on the management triggers as soon as possible because of the characteristics of the way that the market was moving, i.e., hit the FTA, the bodies, and then was moving down in such a corrective fashion. So, unfortunately, there was really nothing more I can do. The market did just come up and take out my stop. Grateful for the risk reduction, as that saved me about 0.4, 0.35 risk to reward on this one, which is good. So, happy with the setup. I'd take it over and over. The risk to reward's definitely there. I tend not to take anything less than a 1 to 1.5 to the 4-hour 50 the 4-hour 50 EMA if it's an IBO, just because I want to keep that that average risk to reward ratio high, so you don't require as high of a strike rate in order to remain profitable. So that was pretty much the setup. Everything was confirmed. I really liked how confluent that area was to catch wave 3. Unfortunately, the way that the market moved away from wave 3 just didn't give me what I wanted to see, or didn't do what I needed to do to take that down further into target, and it ultimately just reversed against me. So quick on the management, saved us the full loss. I'd take it again. I love the position. The directional prediction and the bias is still absolutely there. If we do somehow print a setup that allows me to go short, I will. But until then, we will wait for further confirmation and further setups. Thank you very much for watching, and I'll see you in the next one.